all comes down to today, doesn't it?
Nirmala Sitharaman, Finance Minister, has delivered her maiden budget.
That's Nirmala Sitharaman's first budget, and it packs quite a punch.
What is your single biggest risk that you foresee for the economy today?
To believe in itself and start moving.
Well, let me start the show by thanking you, the viewer. CNBC-TV18 has emerged as the most watched television news channel on Budget Day. We were India's #1 choice with almost 60% viewership on Budget Day. And not just that, CNBC-TV18 has beaten competition in the budget week as well with a 60% viewership. And when the Finance Minister spoke after the budget to CNBC-TV18, in that exclusive interview, we had more than 98% viewership. Well, over the last 19 years, CNBC-TV18 has been your budget destination. The biggest voices on the market, the economy, top policy makers, here on one channel. Not only the most watched business channel, CNBC-TV18 is also the most watched English news channel. So once again, we want to thank you, the viewer, for the trust and the continued support. Good evening. Thanks very much for joining us on CNBC-TV18. Let's start with the market action of the day. Strong global cues helping the bulls make a comeback on Dalal Street. The Nifty snapped its 4-day losing streak, ending over 0.5% higher. The Nifty and the Sensex posted their best one-day gain in the last 8 trading sessions. So perhaps oversold, the market's recovering a tad. Broader markets also rose in line with the benchmarks as the Nifty Bank snapped its 3-day losing streak. And all of this thanks to hopes that the US Federal Reserve could cut interest rates. So it is the global rally that filtered down to our markets as well. And you saw green across all indices today. Well, the bulls are getting a bit of a breather, but sentiment is far from upbeat. Auto sales continue to be in the slow lane. Consumer goods are struggling for traction, and this does not bode well for a potential economic recovery. Now, 3 big newsmakers today were candid about the current situation, even as they remain hopeful that a recovery could be around the corner. Pawan Goenka of Mahindra & Mahindra said April to June quarter was the worst for passenger vehicles in nearly 2 decades. Axis Bank's Amitabh Chaudhary also said that a slowdown in auto and consumption is dragging the economy. And Baba Kalyani of Bharat Forge, while signing a 700 crore rupee defense order, was worried about his bread and butter auto business. So let's start with Pawan Goenka. Now, after a 15% contraction in growth during the first quarter, Goenka says the company could slash its full-year growth projection. But he does remain hopeful that the upcoming festive season could act as a trigger to boost consumption. A sentiment that was also echoed by the president of industry body SIAM, Rajan Vadhera. Let's take a look.
This is perhaps the worst quarter for passenger vehicles since 2001. That means in 18 years we haven't had this kind of drop. And the closest that we came was, I think, third quarter of F09, just before the slowdown that happened. And then we did recover very quickly. And that's kind of what I'm counting on, that if we do all the right things, India has the resilience, the industry has the resilience to recover very quickly from a very sharp drop that has happened. And we have proven it 2-3 times in the history. It's a vicious cycle that we have fallen in, and we need to create a virtuous cycle by giving a bit of a kick for demand for a short term. And therefore something has to be done. And I guess one of the disappointments that the industry had was that while the budget was very good for electric vehicles, while the budget was very good for long-term vision for the government, but for the short-term stimuli that we needed for the next 3 months, 4 months, till the festive season is over, was missing.
Do you fear that demand could fall further over the next 6 to 12 months, purely because we have this BS6 transition that will take place, where there is a cost inflation angle as well? I mean, people are talking about almost a 15% cost inflation too. Is that a reasonable assumption, and do you fear that demand could fall further because of that?
With BS6 prices going up, and the GST also goes up, and maybe Government of India can find some way of not increasing GST for the cost increase of BS6. That means the BS6 cost becomes GST free. and that will obviously help to reduce the impact of GST cost increase on the consumer and somewhat dampen the negative sentiment.
What kind of capacity utilization are you at now? Is there any day-wise shutdown or line-wise shutdown at M&M?
Last month we had, I think, 4 to 5 days of shutdown, which means on a 25 days working, we are about 20% shutdown. And the month of July is looking better. I don't know right now whether we will have a shutdown or not, but even if we did, it will not be 5 or 6 days. It will be somewhat lower. We do expect that July will not be as bad, but we may still have a couple of days of shutdown in July. Okay. August, September, with the festive season coming in, clearly we are hoping that the plants will run full capacity.
The industry is not staring at layoffs, is it?
Clearly, in case of permanent employees, there is no question of layoff because contractually they are permanently employed by the company, and no matter what happens, there is no layoffs that happen. What certainly is true is the demand pull right now, and maybe it will improve in August, September, is not something which will lead to a lot of new employment.
SIAM has penciled in a very conservative volume growth estimate of just 3 to 5% for FY20. What would your own estimates be?
So let me tackle tractor first. See, tractor we had said 5% at the beginning of the year, and we have seen a degrowth of 15% in the first quarter. In our internal estimate, the first quarter was supposed to be small degrowth, maybe 5% degrowth, but not 15%. And therefore, looking at the next 9 months, the 5% growth will require 10% growth for next 9 months to get 5% for the whole year. And 10% appears very unlikely. And therefore, we would have to slightly downward revise our estimate. But I'm going to wait till the end of July to see how monsoon pans out. Right now on auto, I am not thinking about a reduction in our industry growth estimate. And again, it will depend on what happens in July, August. Right now, we're a little bit more hopeful about monsoon than we were at the beginning of the monsoon because the last 2 weeks have been pretty good. And if that continues and we get a near normal monsoon, I think that will bode very well both for auto as well as tractor industry.
July typically is not a very good month because of the monsoons and slowing down of various activities. July is till today not looking any better than June. So we are hopeful that September, due to festive season, should bounce back. With the inventory now under control, and hopefully the month of July also will lead to balancing of the inventories, I think the situation is only going to improve from here as far as the dealers are concerned.
Well, so the slowdown in Motown continues, and now all hope being pinned on the festive season. But at this point in time, growth is elusive. It's not just auto companies. Banks are equally worried about the slowdown in consumption. Axis Bank's Amitabh Chaudhary is cautious about the bank's growth outlook and the sectors that they lend to. Chaudhary said that some industries are showing signs of stress, and even though Axis Bank has shareholder approval to raise capital, he said that they will make the move only when the time is right. Take a look.
Generally, if you see the trend in the market, I think some parameters of the economy are definitely slowing down. I think the numbers for car sales came out yesterday, and they show a real slowdown. You are seeing a slowdown on the consumer goods side also. The credit growth is also a bit tepid, and you're also seeing some stress developing in the generally across sectors. So you have to be careful about just being out there and giving credit out. We'll talk about the growth when we have the opportunity to talk about it. But yes, I think I'll only say that we have to be cautious about how do we look at growth going forward.
So, but when you're being conservative about growth and talking about a slowdown, what is the need to raise capital? I mean, how much lending are you going to be?
We have not said we are raising capital. The only thing we have said is that we are taking an enabling resolution to look at raising capital when the right opportunity arises.
Are you looking to buy any NBFC pooled portfolios, and what do you make of the overall liquidity scenario?
So we have been buying NBFC's portfolios for the longest period of time. It's not something new which we're going to start because budget has talked about it. We will continue to evaluate if the right pools are available, and if it comes at the right price to us with the right kind of credit risk, we will look at buying. But that we've been doing in the past also. We don't anticipate that we are going to suddenly increase the pace at which we are buying these pools. As I said, we have to be careful given some of the trends which are emerging in the economy, and we will obviously, if the right opportunity comes along, definitely go after it. As far as the budget is concerned, I think it has given some clear signals in terms of what the government expects to see on the NBFC side. We are hoping that it can lead to some of the demand coming back. I think the finance minister has very clearly painted a vision and has backed that vision with some measures. Some measures will be rolled out over a period of time.
So my last question on the SR Steel verdict, are you a little upset about what has come out? Lenders are obviously going to challenge this, but what sort of precedent does it set, and are you going to be a little hesitant using IBC going forward?
Well, I mean, obviously the banks are talking about going to the Supreme Court and requesting them to relook at the judgment. It was a bit unexpected. So let's wait for the Supreme Court judgment before we start jumping to conclusions on whether IBC makes sense or does not make sense.
Well, Baba Kalyani's defense bet is starting to take shape today. The Kalyani Group signed a joint venture agreement with Israel's Rafael Advanced Systems for a 700 crore rupee contract to supply missile kits to the Indian Army and Air Force. Speaking at the sidelines of the event, Kalyani was candid enough to admit that government has been slow with big defense contracts. He went on to say that the group should turn its focus on the bread and butter auto business and address the current demand concerns. Take a look.
See, that's the beauty of this business. If you focus on a product and you create a facility to assemble a product, and if you don't get that order, then you can't do anything else. If you focus on a process and creating process-related technologies, then if you don't get that order, you can do many other things. And that's exactly what we are doing. And that is our strength. That you create the capability to understand the process, the technology, and with that you can make many other products.
From a point of view of a defense contractor, however, what is your view on the progress that the government has made on these big ticket announcements? We mentioned Spike. There's the FICV project also, where we've not heard an update for some time, and the general consensus is that the government takes a lot of time for bigger orders while smaller orders keep coming in. Would you agree with this, and what do you think the government can do to better that?
Yes, a lot of time has elapsed for any big contracts to come in, but that's the way the defense systems work all over the world. It's not nothing special about it in India. Okay, I think everybody was on a euphoria that suddenly some big orders are going to fall and everybody's lapsed. It never happens that way. I think you need to create capabilities, you need to create facilities, you need to create products, they need to get tested, the user has to test it. This cycle is a long cycle, it's not a short cycle. And I think if you look at it from that perspective, and that we started only 6 years ago in getting the private sector into the defense system. There was no private sector into defense manufacturing 6 years ago. We started 6 years ago, we have made some tremendous progress. The policies are in place, the government's direction is in place. Okay, we are not a country with unlimited means at our disposal. We have limited means in terms of resources, and therefore resource allocation also plays a role in terms of how much money you're spending on defense and how much money you're spending on other sectors of the economy. So to that extent there is some limitations. Okay, but I think by and large we are doing quite well.
You mentioned government, Spencer. From a Kalyani Group perspective, there's slowdown in the auto sector. Does this mean that you focus more on defense, or anyway are you expecting defense to be a much bigger part of the pie going forward?
Well, even if I want to focus on defense, that doesn't mean I'm going to get more defense orders. That has its own time cycle. As far as the slowdown in auto sector is concerned, I think I need to focus more on the auto sector rather than something else, because that's our bread and butter business. Okay, so we have to find ways and means of what more we can do in the auto sector to overcome the effects of this slowdown.
One last question. We saw the budget coming, not a lot of big bang announcements for either auto or for defense. Was this something that you expected to see in the budget? Are you a bit disappointed? What's your view on that?
I didn't expect, what big bang announcements are you going to see? There was a big bang announcement of where the economy needs to go. So I think you have to draw your own conclusions based on what the government is saying in its economic survey, and where the expenditure is going to take place, and therefore how can you be part of that process?
Well, that's Baba Kalyani saying that need to focus on the bread and butter auto business, and defence, of course, continues to be an interest, but need to watch out for what's happening with the core business. Now, India's long-term consumption story is still intact, and that's the word in from Singapore-based Temasek, which has invested over $11 billion into the country. Temasek's India head, Ravi Lamba, is hot on consumption stocks despite the current slowdown. Speaking to Nisha Podar, Lamba listed out sectors where Temasek could potentially ramp up its India investments.
This hasn't been a great year in terms of optically putting out a return rate for you for Temasek, because from 12% returns in the last year, you're now sharply down to 1.49%, largely on account of listed stocks that you're invested in.
Yes, I think you know our numbers well. So look, we mark to market our portfolio once a year, and a substantial part of our portfolio is listed. And we saw, over the last 1 year, we saw equity values fall in equity markets globally. So we were affected like any other equity market holder of securities. So whether it's 12% 1 year, 1.49% the other year, we do not really look at our performance on a short-term basis. We are long-term oriented as an investor. We look at our long-term performance. And if you think about the last 15 years, we've had a 15% annual total shareholder return. So that's how we think about it. And short-term market volatility is not something we are concerned with.
Right.
We have the ability to we want to invest long. We want to generate returns over the long term in a sustainable manner, and therefore short-term volatility doesn't trouble us as much.
So last year you had been net divestor rather than investor as well overall. So when it comes to the India strategy, how have you really performed in the last year? Have you made more investments than exits in the last year? And what will be the future trajectory for you?
So globally we sold more than we bought last year because of the point I made earlier, where we were moderating our pace of investments. In India, we are at a record high now. We are at $11 billion of exposure in India. We are at 5% of the total portfolio of Temasek, which is also a record high. And we have been investing over $1 billion a year for the last 6 years now. And so net we grew in India last year. We were 4% last year. We were about $10 billion. This year we are 11 and 5%.
You have big investments in some of the big companies like banks, big banks like Axis Bank, ICICI Bank, HDFC Bank, and you have been holding on to them while they went through their worst already. What is your view on these banks?
I think we see the banks as a proxy to economic growth in the country. We've always looked at it that way. When we started investing here 15 years ago, and this is our 15th year of being in India, by the way, we were in banks and we saw them as proxies. We continue to invest in them because they're still a very good proxy for the Indian economy.
Are there other sectors which you're keen on?
We like consumption a lot, and consumption plays into many different sectors that we like. So banks and insurance, like you talked about, there's consumer, there's retail, there's technology, which can be broken up into consumer internet, into sharing economy, into fintech, healthcare. Services is something we like a lot as well. So across the chain, infrastructure as well. I mean, there are parts of infrastructure that are very entirely driven by consumption. So all of that is very interesting to us, especially in the Indian context.
All right. So you've talked about a very broad basket of consumption, but looking at the key consumption companies and key consumption sector right now, that's going through a turbulent time right now. Do you think the valuations would be cheap for an investor to look into it? Because especially when you said that it's short-term in nature in your view.
I think the fact that valuations may have corrected does not necessarily mean they're cheap. I think we have to look at we have to reevaluate.
Right.
How does that business position itself in the competitive environment it is in? Because when one business loses, someone else possibly wins.
Right.
Competitively, things change.
Right.
Then you got to think about how management is tackling the situation they're in. You got to think about how the financial markets are thinking about it. So I think a drop in valuation is one data point, but there are other data points too.
Well, that's Temasek's India view. $11 billion invested, still likes the consumption story for the long term. Now, speaking of the stock markets, former SEBI chief UK Sinha welcomed the government's move to hike public shareholding limit in listed companies to 35% from the current 25%, with at least a dozen PSUs yet to even comply with the 25% limit. Sinha did add a word of caution that this move will need more time to bear out. Take a look.
Minimum public shareholding of 25% was there on the statute since 2001. And every 2 or 3 years, there was a demand from the industry to extend the timeline, and it got extended. So in 2012, SEBI took a very conscious decision that it has to be implemented in 12 months period, no extension. But SEBI also did another thing, that earlier the openings or the avenues for extending the minimum public shareholding were very limited. So those avenues were expanded. And I remember Mr. Haldia organizing a conference of ASSOCHAM in Delhi on this issue. And almost 90% of the people in the room were very skeptical that whether at all it is going to be implemented. But SEBI was able to do that. Not only that, on the very next day, within 24 hours, those companies which didn't implement it, they were penalized. The enforcement action started. Having said that, I would like to also mention that SEBI could not do it for public sector undertakings. And that is one regret I have. Because the legal position is that rules are framed by the government, and under SCRR, government framed a rule that they would be having some extra time for this. Over a period of time, those timelines have been expanded. So if you ask me about 35%, my feeling is that it will take its own time, and it should take its own time, because 25 to 35 is a good move, but it's a big jump. So we should provide a reasonable time frame for doing that. And my second comment is that government should lead in this. The capital market rules should be agnostic to who is the main promoter or the main shareholder. Irrespective of that, rules should apply equally to everybody. Only then it can be implemented.
Well, both important points that are being made by the former SEBI chiefs, that the move from 25 to 35% in terms of public float will need to be given adequate time so that it's not market disruptive. And secondly, that this must apply to government companies as well. As we already pointed out, that there are several companies within the PSUs that still don't meet the 25% public float norm. So there's the former SEBI chief saying that the rules must be agnostic of shareholding. With that, it is time for us to wrap up this special edition of the Newsmakers. Before we go, we leave you with HDFC Bank's Aditya Puri when he was thrown a curveball about Vijay Mallya and Nirav Modi. Thanks for watching.
Nirav Modi, Vijay Mallya, both are your, I'll not call bum chum, but pretty close friends, I'm told. Yes, they are his friends. How could you say no to them? I'm sure they came to you and seeking money. How did you avoid them?
No, Mallya is not my friend.
Okay. Okay. Nirav Modi is.
Nirav Modi is not my friend. But okay. I'll tell you, if somebody in Mallya's office heard you, he would tell you, every time the call came from me, wo Mallya gaali deta tha. Chor ka, his blood pressure would go up. So, friendship and banking is not correlated.
Okay. Okay, sir. You answer.
If you're a bad risk, you're a bad risk. So you can be my good friend. Seresh told you that, na? You can be my good friend. I can give you coffee and send you away.
Not money.
Just for your information, they did come to me for a loan, and I gave them coffee, and I told them about the world, and I said I would consider the loan. And then I said, Paresh turned it down as far as Mallya is concerned, and he knows what happened.
Okay.